senior leaders from Infosys, Finacle, and CA Technologies, distinguished guests. Let me first thank you very much for inviting me to be here with you at this Digital Banking Summit 2018. I always feel somewhat insecure and a bit of a charlatan when I come to events involving technology, because I'm the archetypal dinosaur who's only just graduated to a smartphone. You've got to, I guess, take into account the very slow evolution that I am undergoing in distilling what you take away from my remarks. But fortunately, my colleague Rohana Vijayasekara has armed me with some speaking notes, which I hope will enable me to make the next 10-15 minutes reasonably worthwhile for you. I think we see rapid technological change all around us. When you take what's happening in terms of artificial intelligence, robotics, 3D printing, the Internet of Things, big data, all this taken together is now, I think, collectively called the fourth industrial revolution. And we are living in an era of exponential change. The pace of change is accelerating exponentially. And it's affecting every aspect of our lives. And the banking industry is no exception. I think fintech and blockchain in particular are having there's, I think, a constructive disruption taking place. And in Sri Lanka, one could argue that we're overbanked. We have 26 banks, 6 licensed specialized banks. We have a tremendous amount of bricks and mortar with a very, very wide-ranging branch network, which has meant that financial services, to a significant degree, have penetrated much of the country. There is still more to do in terms of financial inclusion, but if you go into any small town in Sri Lanka, you will see 4 or 5 branches. Now, while that has served us pretty well in the past, one's got to ask the question, what is the banking system going to look like in 5 years or 10 years' time? And if one asks this question honestly and in a tough-minded manner, one would say that the branch-based banking system is in obsolescence. It's not yet obsolete, but it certainly is in obsolescence. So how do we transition in a manner which does not threaten the stability of the system? As a central bank, as a regulator, we are preoccupied with stability. That's really kind of embedded very deeply in our DNA. Whereas the new technologies are innately disruptive. So certainly as a regulator, you don't want to hold back technological progress. But at the same time, how do you embrace this rapid technological change in a manner that does not destabilize the system? So that's really what the key challenge for regulators is going to be going forward. Clearly, the financial services sector is going to look very, very different in 5-10 years' time. And how do we help to mold, shape, and manage that change in a way that maintains stability and provides better services for the people of Sri Lanka, and also increases the efficiency of financial intermediation, which is in many ways the lifeblood of an economy. So the digital economy is assumed to be much larger than what is measured through traditional measures. It has accelerated with significant spillover effects to all corners of the world over the last 15 years. As advanced economies mature in their process of digitalization, leading emerging economies like Singapore, Malaysia, and China are now beginning to match the advanced economies in the use of digital assets. As the exponential pace of change forges ahead in our lives, the banking sector is one industry where digitalization can have a significant impact on people's lifestyles. The global banking sector has been adopting emerging technologies such as open banking, platform banking, cloud computing, electronic onboarding, cryptocurrencies, blockchain, AI, and big data analytics. Such technologies are generating significant benefits and are inducing customers to expect ever easier access to safe and secure banking. They are also enabling banks to reach the underbanked and unbanked at a lower cost. Technologies such as AI and blockchain generate benefits which are beginning to enhance customer personalization, generate productivity gains, improve fraud mitigation, and produce better product service recommendations. All this could be complemented by the development in big data analytics. In Sri Lanka, the banking sector has seen considerable progress in terms of digital adoption, and many projects are still in the pipeline as well, but more needs to be done. For example, fintech and telcos can reduce entry barriers to financial services, elevate the reliance on information-driven financial services, and drive the emergence of new business models. In this continuous innovation and continuous evolution of innovation and localization, these can in this continuous evolution, innovation and localization can be considered the keys to success. Now, let me talk a bit in my next segment of my remarks about enhancing rural connectivity to digitalization. The rural community is largely connected in terms of communications through various media forms. However, they still remain too disconnected in terms of financial services. According to the Department of Census and Statistics, 77.4% of Sri Lankans live in rural areas. Most of them transact exclusively in cash and have no safe way to save or invest money. For them, credit tends to be scarce and expensive. An indebtedness survey conducted by the Statistics Department of the Central Bank, led by Rona, has carried out a survey in the North Central Province, which has revealed that traditional bank branches are not accessible to low-income rural families who have relied mainly on informal lending channels. Hence, there is an imminent need to focus on connecting the disconnected through digital banking. Mobile technology can play a key role here, as mobile penetration in Sri Lanka is around 140 per 100 persons. I must say, when I saw this, I was surprised. I thought it was maybe around 110 or 115, but it's 140 per 100 persons. Therefore, attention should be focused on mobile money, as most people in current society, particularly the millennials, are increasingly expressing a preference to interact through non-branch channels. Further, the rapid spread of smartphones can be used as a powerful instrument to improve connectivity of the unbanked and underbanked in the rural sector. In the Sri Lankan context, coverage of digital banking can be expanded via the following: digitizing remittances, paying wages, granting government subsidies, paying utility bills, and school fees. In Sri Lanka, in terms of government subsidies and other payments, Sri Lanka is about to have a biometric ID card system. So hopefully in the period ahead, we can replicate what has happened with in India in terms of the Aadhaar card, which has, I think, brought about a qualitative, material advance in the way the government has been able to deliver its services, particularly to the poor and vulnerable in that society. And I think we have the scope to do that and to improve the efficiency of our social safety net significantly through using the biometric ID card for the delivery of a number of our welfare services. Our social safety net would be significantly improved by reducing various leakages that currently take place under the present systems. The other way of promoting digitalization is through installing kiosk machines in key marketplaces of rural areas to encourage people to engage in digital transactions. This would serve to reduce the digital divide that we see between the rural and urban areas in this country. Yet another avenue is to develop online transaction platforms to connect the buyers and sellers of the agricultural community. Using such methods saves considerable time and travel costs, it reduces risk of theft and losses, and it boosts convenience. So there are multiple benefits to be gained by improving rural connectivity through digitalization. Looking ahead at the future, in this era of imagination, as the contemporary period is sometimes referred to, traditional banking is going to be continuously challenged by emerging concepts such as person-to-person lending, the sharing economy, crowdfunding, social-based lending, wallet solutions, etc. Banks would need to build their technology capabilities to get more intelligent about their customers' needs. Meanwhile, digitalization could trigger significant reduction in banks' cost structures, which can be used as a method of serving lower-income customers profitably. Today, actually, banks, I think, exclude a significant segment of the population simply because of the high transaction costs of serving them. Technology has the potential to reduce those transaction costs and make those customers accessible, not only accessible, but profitable for banks. And this is a potential game changer in terms of financial inclusion. At a time when the country is embracing cashless transactions and when blockchain and cryptocurrencies can change traditional business models, market players have a bigger role to play in educating the mass public. This is something I think clearly is a responsibility of those who are at the cutting edge of technological change, Infosys and all the other companies operating in this area, banks adopting new business models, the central bank as a regulator. All of us need to work collectively to raise awareness about the potential of these new technologies so that the considerable gains that can be generated through them can materialize for the benefit of the widest possible cross-section of our society. You know, in the modern world, there's a very high premium attached to competitiveness. In a globalized economy, if you're not competitive, if you're not lean and mean, clearly you get left behind. And technology is constantly enabling improvements in competitiveness. And so it's extremely important that we include as large a proportion of our population as possible in terms of giving them the capability to access these technologies, which would then make them at the individual level competitive as well, so that their life prospects are improved accordingly. As far as the challenges that the industry might face in the context of this rapid technological change, these challenges include privacy, confidentiality, high initial investments, breaking the stigma around traditional banking, etc. So there are challenges which need to be overcome to take advantage of the considerable opportunities these new technologies present. Banks would have to get ready for the new normal by focusing on getting the right talent, systems, and adoptive technologies. Clearly, human resources are going to be a key factor in determining the success of banks in terms of the benefits they can derive from this rapid technological change that we see all around us. And one has to put in place the right systems to ensure that some of the threats that come with this technology are also mitigated and that the risks are managed as well as possible. As for the regulators, we would need to identify and facilitate the appropriate regulatory and supervisory technologies that will augment the opportunities presented by the digital economy. Being the regulator, the Central Bank of Sri Lanka is fully supportive of digitalization and the use of new technologies, and in fact promotes the less cash society in Sri Lanka through the use of new cashless payment mechanisms. In this context, the Central Bank has been fostering industry collaboration for creating a strong institutional framework. The Sri Lanka Digital Payment Innovation Policies are spearheaded by the National Payment Council, which is an industry collaborative council comprising all stakeholders. And the NPC appointed two committees, one on fintech and the other on blockchain. The fintech committee has initiated the process to set up a fintech regulatory sandbox so that the fintechs can be provided with the necessary regulatory guidance to develop their products in a safe and secure environment. The blockchain committee recommended the setting up of a working committee on blockchain technology since it has the capacity to change the entire financial transaction infrastructure. So these two committees have submitted their initial reports and they will be now available for consultation with the industry players, and hopefully in a short period of time we will be able to come up with a roadmap, both in terms of fintech as well as blockchain, as to how Sri Lanka can move ahead. In the move to digitalize, change management would need to be practiced by both industry participants and regulators to act consciously to derive the maximum benefit from disruptive innovations. In conclusion, the responsibility lies within us to disrupt ourselves and ask what we can do more to improve connectivity and engagement of all segments within our society. As I said, as a regulator, the challenge for the central bank is to create a conducive environment to promote technological change, to find ways and means of making that technology available to as wide a cross-section of our population as possible, but all the time balancing rapid change with stability. That's really what the regulator is preoccupied with and is expected to deliver upon. Thank you all very much.